Hi everyone, welcome to another Vina Edge video. Today we'll be breaking down 4 South Korea ETFs that have very different strategies. We'll be going over these ETFs, what their underlying strategy is, and then giving you some performance data on them to help you decide if they're a good investment for you. This is a supplement to our general video on South Korea, which we'll link above. So if you're interested in more South Korea exposure in your portfolio, this video might be interesting to you. And before we get started, as always, this video is for informational purposes only, and this is definitely not investment advice. Here we have the 4 major South Korea ETFs. These are the Franklin FTSE South Korea ETF, ticker FLKR, the iShares MSCI South Korea ETF, ticker EWY, the Matthews South Korea Active ETF, ticker MKOR, and the Direxion Daily MSCI South Korea Bull 3X ETF, ticker KORU. The Franklin FTSE South Korea ETF is a low-cost passive index ETF that tracks the FTSE South Korea capped index. So the goal is just to give a broad exposure to South Korean stocks at a very low fee, which it seems to succeed at. The iShares MSCI South Korea ETF is a mainstream passive ETF that tracks the MSCI 2050 index. It gives broad South Korea exposure but through a different index provider and at a much higher fee than the Franklin FTSE South Korea ETF. The Matthews South Korea Active ETF is, like its name suggests, an active ETF that selects Korean companies that it believes will have strong long-term growth potential. And finally, the Direxion Daily MSCI South Korea Bull 3X ETF is a leveraged tactical trading ETF that tries to deliver 300% of the daily performance of the MSCI Korea 2050 index. This means that it's built for short-term trading, not long-term country exposure like the other ones are. Here I've listed the launch dates of the different funds as well as the differences in their assets under management, so pause and take a closer look if you'd like. If we compare the two passive ETFs, the Franklin FTSE South Korea ETF is much smaller, newer, and has a lower expense ratio at just 0.09%, making it the most cost-effective option we see on the slide here. The iShares South Korea ETF is much larger, has a bit longer track record, and is more expensive with an expense ratio of 0.59%. The Matthews ETF and the Direxion ETF have much higher expense ratios that reflect their respective strategies. In terms of sector tilts, all of the ETFs are pretty similar, with IT, industrials, and financials making up the top 3 sector holdings in each of the ETFs, which is not surprising given the way that the South Korean economy is structured. The Direxion ETF is structurally very different from the other 3 on the slide. As of April 2026, the portfolio is comprised of EWY, which is the iShares ETF, swaps, and cash because it uses these tools to create a 3x daily exposure to Korean equities rather than simply holding a broad basket of Korean stocks. So what's happening here is that the ETF is using cash, EWY, and some overlays of derivative contracts so that the fund's total daily Korea exposure is about 3 times its net assets. The ETF's prospectus says the fund may invest in swap agreements, ETFs such as those tracking the same index, and cash-like instruments, and that these are used together to obtain the leveraged result. Thus, the cash can help support the derivative structure, and the swaps are what push the fund towards the 3x daily Korea exposure. Next, let's take a look at some of the performance data. FLKR, EWY, and MKOR all show pretty similar performance data, which is not surprising given the sector tilts are almost identical. So what you really want to think about here is whether the added expense ratios of EWY and MKOR are worth it. With EWY, you're getting an older fund with a little bit more history behind it, and with MKOR, you're paying for active management, which at some point you'd hope would outperform the other ETFs. KORU is a clear standout on the table of having a much stronger performance ratio than the non-leveraged Korea ETFs. However, this outperformance comes at a very different structure and with added risk to it. The fact that it's 3x leveraged means that it's designed to magnify the daily moves of Korean equities, not simply be a better long-term version of FLKR EWY. Thus, in strong uptrends like we've seen over the past few years, the product can be very eye-catching as we see. However, in a more volatile or falling market, the same leverage would work against investors very quickly, and the daily reset of the fund means that over time, it could become much less predictable. So while the headline performance here is real, it comes with considerable more risk which you need to take into account if you're going to invest in this ETF. And that concludes our video on South Korea ETFs. Thank you very much for watching. We hope you found it informative. And if you're interested in more emerging market living and investing, please check out vinaedge.com. And one final reminder, this video is for informational purposes only, and it is not investment advice.